You are listening to the Wealth Formula Podcast with Buck Joffrey. Get ready to change your life.
Welcome, everybody. This is Buck Joffrey with the Wealth Formula Podcast. Today, I am recording on an iPhone, the introduction at least. I'll get to that in a moment to explain why. But in the meantime, let me just tell you that there is a webinar coming up that you should be aware of. That is a webinar on American homeowner preservation. It's Tuesday the 19th at 5 p.m. Central. American homeowner preservation is George Newberry's group. Basically what they do is buy failing mortgages at pennies on the dollar with investor money, turn around, and then instead of kicking people out of their home, they do a rent to own with the owners and for a significant profit, so everybody wins. And the investors get a 12% return. I've been investing in this for years. It's a great opportunity, and George has a big acquisition that they're looking at, and I want to make sure that if you're interested, definitely go to wealthformula.com and click on the American Homeowner Preservation AHP webinar link and sign up for that, because you can learn all about it and ask questions as well. Again, go to wealthformula.com and do that. While you're there, make sure you also grab a copy of 7 Secrets of Eternal Wealth, which is a PDF book there, sitting there. It's actually a bestseller on Amazon, but is there for you to simply download for your reading pleasure. That's my best-selling book on Amazon. You can also simply get that by texting 44222 and typing in Wealth Formula, one word. 44222 Wealth Formula. Get that book, and you will be all set. So, with that said, let's go back to why this recording kind of doesn't sound so good. I mean, the rest of the podcast will, so don't worry. It's the intro and outro. So, the reason is that I'm actually kind of a refugee right now from the Thomas fires that were in Ventura County. They started creeping towards my town here, Montecito, California, which is just south of Santa Barbara, and so that's why my audio sucks. I'm on the road. I'm fleeing. As I mentioned on last week's show, I had woken up and there was ash on my deck, and the smoke detector was going off without any apparent fire, and it was clearly getting worse. So my wife and I made the decision at that point. We weren't asked to evacuate, but we decided, this isn't going to get better anytime soon. The air is already lousy. Let's go up to San Luis Obispo, which is about 100 miles north. So we stayed there for a couple days, which was fine. And the next thing you know, we look over the mountains and the smoke is following us. So we got back in the car with the kids and threw them in the car, and we drove up to my wife's, where she grew up, which is Santa Cruz, California. We didn't really anticipate being gone for this long. We thought it was just going to be a couple days, but we're still gone here. We're going to be here for a week. The whole thing was pretty stressful, honestly. I mean, it didn't seem like it would be that big of a deal just being out, but, we were stressed out. The kids could feel that we were stressed out, so they got scared and emotional. So the whole thing has kind of been a little rough. But the funny thing is, in the midst of this, I started thinking to myself, well, listen, I'm feeling sorry for myself. Imagine what it'd be like if, I was fleeing a country and somebody was shooting missiles at me while I was fleeing, and I had my kids with me there, and, my government was trying to kill me. And that's basically what's going on in Syria, right? It's kind of crazy, and, it's not about getting political. I mean, you just got to feel bad for those kids and those families in that situation, and then it makes me start wondering, like, how does that kind of perspective, affect a 5-year-old boy, for example? What if he sees horrible things and, sees the stuff and feels hopeless every day? Now, I'm not trying to get super deep here because, of course, I'm talking about financially what happens to this person. How does this manifest this person in adulthood? Of course, again, since this show's about money, I'm thinking, how does this affect a kid in terms of the way he thinks about money and wealth and poverty when he grows up, right? So, if you, for example, if you grow up not knowing that there will be food to eat, or if you have a roof over your head, or if you're dodging bullets or whatever. How does that influence your view, of everything when you get older? I mean, I don't think there's one answer to that question, but I will tell you this: my dad grew up in India, dirt poor, and that's really poor, man. I mean, it's third world poor. That's totally different than even in the U.S. But he got by tutoring kids in the neighborhood, in his neighborhood as a kid, and that helped put food on the table. And he ended up coming to the U.S. in the 1960s on a scholarship, engineering scholarship. Of course, he never looked back at that point. He actually ended up seeing all sorts of opportunities that I even know existed, right? I mean, he was like a kid in a candy store. And I can tell you that I truly believe that his experience as a kid really working to survive without safety net served him well as a scrappy real estate entrepreneur who ultimately, he just was he was living the American dream. But what about the rest of us? How can we tap into that inner immigrant? It's hard. I mean, even me, I'm the son of immigrants, but man, I am totally first world. I mean, I grew up upper middle class and, went to prep school, fancy schools. I had my bills paid. I mean, in order to get your inner immigrant out, you have to imagine a world without structure, the structure that we're so accustomed to having. You have to imagine a world where simple things like clean water, a roof over your heads, and people not trying to kill you are not guarantees. But, and if you do this, the world seems a lot more scary, right? I mean, maybe a little bit of that perspective is actually healthy. After all, most of the security we feel is, in fact, artificial. Let me give you an example. We talk about job security, right? That's why a lot of people don't want to become entrepreneurs, because of job security. You know what? There is no such thing as job security. If you work for someone else, you're at the mercy of your company's financial performance and what somebody thinks of you. Just because you don't get to see the company's financials or get to be in on the board meetings doesn't mean they don't exist. And if you're the boss and you own the business, I mean, that's my position generally, you know even better that there's no such thing as job security, because you have been confronted with the prospect of letting people go in the past, and because you see your own financials go up and down, and it's not always stable. That's all artificial. Paycheck coming in that's the same every couple weeks, that's artificial. That's not reality. You see, the reality is that behind our facade of a secure world, there is an underbelly of reality that we really should be cognizant of, and for which, at the very least, we should be somewhat prepared. The major difference between immigrants fleeing hardship and most of us living comfortably in this country, including myself, frankly, I'm not saying I'm any better or I have a better vision of the world, is that immigrants who are fleeing to this country, a lot of times, they see the world without its makeup on, right? They see this world without social nets. And when you look at the world without its makeup on, it ain't pretty. Anyway, that's a long rant to simply tell you that today my guest, she didn't grow up in a war-torn country, but she did grow up homeless in this country, which is actually pretty similar to sort of an immigrant experience. So it'll be interesting for you, I'm sure, to hear that perspective from a very successful person by the name of Gena Lofton, who we will talk to when we come back. And she has just started another show called Accredited to Accredited. So when we come back, Gena Lofton.
Are you having a hard time finding great investment properties? Unfortunately, the best deals are rarely found locally. Successful investing begins with the right properties in the right markets. Norada Real Estate provides everything you need to invest in the best deals across the United States. Our simple, proven system will help you create real wealth and passive monthly cash flow. Learn how to find the best deals by downloading your free copy of The Ultimate Guide to Passive Real Estate Investing at noradarealestate.com. That's NORADA realestate.com.
There is no excuse for lazy money. or lazy retirement money. After all, it grows tax-free. With Impact Housing, you can invest with a team that has a strong track record of making investors money through value-add strategies of neglected apartment buildings nationwide. The Real Estate Crowdfunding Review just named Impact Housing to their top 14 real estate investing sites for non-accredited investors and gave industry honors to it for most experienced sponsor and most socially conscious. Put your retirement money to work with an investment in Impact Housing. Head over to impacthousing.com. Again, that's impacthousing.com. Welcome back to the show, everyone. Today, my guest is Gena Lofton. Gena is an ex-high-paid professional, just like me, who, like me, considers herself now a professional investor. And since 2012, Gena's built a pretty significant real estate portfolio with ownership in over 4,000 apartment units in 4 states. She's also a resort property owner in Ambergris Caye, Belize, which I'm assuming, unless I'm wrong, is a similar property that I'm an owner in. And outside of real estate, she's also an active investor across a number of other assets, such as assisted living facilities, oil and gas, junior mining, natural resources, a bunch of things like that, just to name a few. She is also the author of Escape the Madness, The 10 Steps to Get Out of the Rat Race, and now the host of a new show called Accredited to Accredited. Gena, thanks for being on Wealth Formula Podcast today.
No, thank you, Buck. This is great. I'm really happy to be here and share whatever I can with all of your listeners.
Yeah, we met at a junior mining conference there in San Francisco, which I was at. My sister lives in San Francisco, so it worked out pretty well. I just went to the conference for a couple days and there and got to meet you. We've sort of been in similar paths and actually have very similar sort of, I think, ideals, and I thought it'd be just great to get you on and kind of talk about it. Now, you have a great story, and I don't know it all, but I know bits and pieces just from what I've read. I'm wondering if you can kind of give us a little bit of a background on who you are and, where you came from and how you got to where you are now.
Yeah, no, that's a good place to start, just at the beginning, and I'll just be as brief as I can. But I was born and raised here in Southern California in an area called Inglewood, as a matter of fact, which is about, 5 miles from the LAX, the major airport here. And my parents were unable to take care of any of their kids, not because of drugs or anything like that. They just were not financially able to do that. So as a result, we lived on the streets and we were taken into foster care. So I was raised in foster homes and ran away from the foster homes, dropped out of high school and was a really bad kid, and did eventually go back to high school and finished, and then went and got my degree and have gotten an MBA, and just did what I was actually thought I needed to do, which was to work and kind of get a job and go to school and do it that way. And I did it. I had an amazing, I'm kind of like going really fast, obviously, because this is, 30.
It's your whole life. I'm saying, hey, can you tell me a little bit about your whole life?
Yeah. Needless to say, I wasn't raised with that silver spoon.
Yeah. And I think that's what I was getting at. You have an interesting story. Not many people in your position start out, being homeless.
I was never the Huxtable. There was a show called The Cosbys.
Oh yeah. I'm old enough for that one. Come on now.
Name on there was the Huxtables. And do you remember the show?
Oh yeah.
Yeah, exactly. And I remember, during, years ago, I would never really tell people about my background because I worked in some really what I thought was, and still is, very well-to-do firms such as Ernst & Young, and was on that path to be partner and all of this good stuff. And I thought I was kind of embarrassed about who I was. And then I said, you know what? I want to, maybe 10, 15 years ago, I said, I'm kind of proud of that. I didn't grow up like that, like other people.
Right.
And so that's my background. I had no kind of guidance. My career aspirations from my foster parents were to maybe go to a trade school, be that Mount Sac, and put resistors on a circuit board, literally.
Yeah.
That was my guidance. That was the aspirations that they had for me. And because I didn't have anyone to give me guidance, it may have taken me a little bit longer to figure stuff out. But I'm glad that I did, and I'm a lot younger than most.
So, obviously that's, it's a story that I think it's not uncommon in the world. It's uncommon for people who are often as successful as you are. I have to ask you this question because I think it's important. When you look back, you sort of alluded to the idea that you had to figure it out, right? Because no one was guiding you.
Yeah.
But do you think that your story, the way you describe it now, do you think in the long run it helped you or hurt you to become who you are or guide you where you are now?
Buck, that is such a great question. And let me say this, it's helped me tremendously.
That's what I thought.
Yeah. I would never, ever, ever want it to be any other way.
Yeah.
Especially when I see the people that didn't have it bad, or like what people would call bad, like I did. It's just, they're not very resilient. And it's just, they're very different.
Yeah. Well, and beyond that, what I think is interesting is when you have a more stable environment, or maybe you have more money when you're growing up and maybe you don't think about money, at least in our country, the default at that point becomes, going to school, getting a high paid job, and invest for the long run in a portfolio of stocks, bonds, and mutual funds through your wealth advisor. But sometimes when you have everything that seems to work out, you just follow conventional wisdom because it hasn't failed you in the past, right? And
exactly.
And so sometimes it's actually an advantage to not have everything in place. And I think certainly my situation was probably a little bit more conventional, but I am the child of immigrants, which certainly helps. Because it brings a different perspective to my life. And my dad turned out to become an entrepreneur despite being a professional. And having that different perspective was huge for me. And I would imagine, and when I look around me, I look at all these, my professional colleagues who are really successful, but have a really hard time with the notion of thinking about their investments and doing anything that's not conventional wisdom. For people sometimes like you, or like maybe my father, or to a certain extent by my virtue of my father, me, it's easier to make that move into the unconventional. Do you think that's fair?
Yeah, I mean, I do. I guess my only kind of add to that is, for me, it was, I must be able to depend on myself, right?
Mm-hmm.
Financially. And because of my upbringing, my fear was so high to let someone else, be that a employer, be that a husband, be that a government or anything, have so much power over whether or not I had a roof over my head, right?
Right.
Like that for me, because I was homeless, was extremely, extremely scary. Right?
Yeah.
Even to this day. So, I don't know if that helps.
No, it does help. And in fact, that is very similar to kind of what I'm getting at, because my dad is my parents are immigrants, and my dad grew up poor in India. So, they didn't have enough to eat a lot of times, things like that, which to me is completely foreign, right? But I see this guy, and this is a classic immigrant story, and your story is almost like a little bit of an immigrant story, because effectively you are not used to having all of these, guardrails in place that protect you. You're not walking a tightrope with a net underneath you. There's no net there. And for most of us, when we grow up, we have a net, and the way we approach life is different.
It is very much so. Very, very much so. Yeah, it's psychological, and I wish there was, some type of maybe there are some studies out there in the medical field about, how this works and why is this, right?
Yeah.
I don't know. I don't have that expertise, but it would be a very interesting study.
Yeah, I think there's some studies on immigrants for sure that they show that immigrants tend to be more entrepreneurial, et cetera. But these are the same people who are coming across the world and leaving their families. So it's they sort of, you pick these people out too. They're people who have got a little bit of more instinct to do something different anyway. But anyway, yeah. So that's a great insight though from you. I think that it, sometimes the things that make us different, make our lives less conventional and harder, actually will make us more successful in the long run.
Yeah, and before we transition to another topic, just to conclude here is that in addition, to having that upbringing, I also have lived outside of the U.S. And so that also kind of made me see things very differently, right? And where sometimes I see people that are Americans that have always lived here, and some of them have never left. It's difficult for them because of that safety net component that you're talking about.
Yeah. One perspective on that was, we both know Robert Kiyosaki. And Robert, I remember talking to him last April, and he was telling, Vietnam had a profound effect on him, as you know. And one of the things, Robert these days is I think he's definitely concerned about what's happening in the world and the economy. And, I don't remember how it came up, but somebody was asking him why he was so worried. And his answer was basically, have you ever seen what people do when they don't have enough to eat and when they cannot feed their children? What they're willing to do, right? So that's a different perspective. No, we don't really see that so much. I mean, to a certain extent, it's, but and sometimes he's talking about Vietnam and people like basically getting so desperate that they'll kill their neighbors so that they can feed their children, right? I mean, so that, right. So that kind of thing. And I don't mean it in that extremes, but yeah, you're right. I mean, it's a different world. And when you see things differently, sometimes you'll take different risks. Sometimes you'll have a little bit more drive, to make sure that you don't end up in that position. So let's shift a little bit, because now you are obviously a very successful investor. Let's talk a little bit about your investing and your strategy and how do you approach investing?
Yeah, no, that's a really good question. And I have this philosophy that I must be able to maximize my returns in the most efficient way possible in the shortest amount of time with the least amount of risk. So what that means is, I will just say it like this. When I send $1 out the door in the morning, I need it to be coming back by lunch, and it's coming back with as many friends as possible. The friends stay here, and then the other ones leave after lunch, and then they're back at dinner. It's always a round trip ticket, right?
Right.
And that round trip ticket must be quick, short trips, right?
Velocity.
The velocity, absolutely.
Right.
The velocity. I'm all about the velocity.
Yep.
And the reason why, it's a very methodical reason that I am this way is because I'm an economist too. I have an MBA in economics, and I'm a student of monetary policy, and I understand money very, very well, is that the value of your currency is declining tremendously. And so if you're not really good at understanding this, you will never be able to keep your standard of living the same. So if you understand that their middle class is shrinking, it's becoming extinct, and at a very rapid pace, and it will continue to do so. And it's because of, inflation as well as taxes, right?
Mm-hmm.
So to counteract those forces, I use something that's called debt and velocity, as well as tax efficiency, a combination of all three to make sure that that return trip for the dollar that went out comes back quickly. And so that's my philosophy.
Yeah.
I know that's, a lot.
Well, it's not actually, because to the extent that that's sort of the mantra of my show. In the wealth formula, what I talk about and sort of hit on this show very frequently. So wealth formula, there's several components to it. There's a mathematical sort of approach or mathematical equation for wealth, and wealth, creating momentum in wealth. I say momentum in Newtonian physics is equal to mass times velocity. Mass being how much money you put in, and velocity being how quickly you turn it over. And then, if you remember in math class, you put a little parentheses around that. If you want to move even quicker, you multiply that by leverage. And so these are not foreign things to this show. You're preaching to the choir, my dear. This is a perfect show for you.
Good.
So we're all about velocity and leverage. And as you know, velocity is the thing, the best way to think about velocity. It's the thing that wealth advisors pretend the stock market creates for you, and they call it the magic of compounding interest. But basically what it is taking your investments and your returns, reinvesting all of that together, and then doing the same thing over and over again, effectively returning capital, adding to your principal, and then reinvesting it. So that's velocity. Leverage is using other people's money. Banks, other people, if you're raising capital, it's using other people's money. So that's effectively it. So in real estate, we do that frequently. Tell us, and I think that my audience here is quite used to that concept. But outside of real estate, give us some examples of how you do it outside of real estate.
Well, okay, I'll do real estate too, because I don't know if people really understand the example I just gave with the dollar going out just in the morning. But
sure.
In real estate, I only do value-added real estate, and I know everyone has a very different definition of that. I have a very specific definition, and that means that I must get all of my money back as soon as possible, but keep the asset.
Right.
It's extremely, extremely clear.
Right.
That's all I do. So that means my returns are infinite. I do not sell the asset. So that's the only type of investing I do, which is, of course, correlates to what I just said earlier about the money leaving and then it coming back and then going back out again, but some stays. So I like to get very wealthy, but recycle with the same dollar, right? Yeah. So for example, when I, do a building of any kind, it must actually be able to get all of the money back or more, or as close to it as soon as I buy it. And I want the cash flow from that asset to stay with me in perpetuity. So therefore my returns are infinite. So that's the only type of real estate I do. I don't do anything else other than that. And I actually don't do any investing other than that. Real estate or otherwise, it must do that.
Right.
Whatever it is. So let me give you an example that's not real estate, right?
Let me stop you for a second, because I just want to make sure the audience is understanding what you said. But effectively, we've talked about this type of strategy before. I mean, in the context of, we've had Ken McElroy on the show. This is a classic Ken McElroy maneuver, right? Where you have a building that he purchases with investor money. Say it's a $20 million asset. They put up, let's say $5 million of equity from investors. They include the improvements to the property. They know that they can manage it well and make the property perform better. And then, once it's stabilized and once it is producing more income, then it's inherently worth more. That's just the way that real estate works when you're outside of the residential 1 to 4 units. The value of a property is based entirely on how much income it's producing. So if you increase that income significantly, you can go back to the bank and say, hey, my property's worth a lot more. I want to refinance. And then all of a sudden, the next thing you know, you're giving Gena back her money that she initially invested, but she still has ownership in the same cut. She still has equity. So she's still getting cash flow, and that becomes infinite return on investment. Anyway, presume that's what you're talking about, but I just want to make sure that that's clear. Take it as a little teaching moment.
Yeah, no, absolutely. So Kenny's one of my partners. So that's exactly how it works.
Right.
And, for me, it's a very simple. It was when you have no money, the math is really simple. So if you need $100,000 of income coming in passively to get out of the rat race, right? You need $1 million earning 10%. Are we in agreement so far?
Yeah.
Okay. All right. So this is how it really just became clear and really drove my investment philosophy. And I talk about this in my book, is that your investment philosophy drives you into doing certain things. Well, because I had no money, and I knew that I needed that $100,000 a year of passive income, then I didn't have $1 million. I didn't have 10%. So the only answer that I knew was that I must print money. Well, how do I do that? I must do value-added real estate, right?
Right.
So it was I had to take my goal and then actually derive what the route to the goal was, to achieve it in the most expedient fashion. Mm-hmm. Does that make sense?
It does.
Yeah. So that led me to only doing one thing, and that's all I do. So, but it's not just about why I do it. You have to understand that when Obama went into the office, it was $10 trillion of debt, right? In the U.S., and that's not including the unfunded liabilities, Social Security, Medicare, et cetera, et cetera. By the time Trump took office, there was $20 trillion of debt on January 20th, 2017. So in fact, they've doubled the actual total debt. So if you're not growing your wealth proportionately in that time frame, you are already behind. And so I would actually kind of suggest to your listeners that Trump's got to go from 20 to 40 in half the time. So the sooner people understand this, the better chance they have of keeping their standard of living either the same or if not growing, because any other way you're going to go down.
Right.
I mean, for me, it's very simple. It's like if there's 3 classes, upper, middle, and lower, and one goes away, then you decide which one you want to be in, because middle is gone.
Yeah.
So if you want to be in higher, you have to be very proficient at understanding debt and taxes and the velocity of money. And so that's what I love.
Yeah. Yeah, absolutely. I think we're in agreement there. Right now, as a real estate investor myself, I'm looking around. Boy, it is tight, Gena. So tell me how you're investing. There's not a lot even in the value add space right now out there. So are you finding things? Have you shifted to other investment classes? Mm-hmm. What are you focused on these days?
I am actually, so let's just back up. So I only go and do things when things are on sale. I am a contrarian investor. So when I come in and out of asset classes all the time. So just for your listeners' benefit, I'll just give you an example. So I built another asset that you might have heard of called DirecTV, right? Mm-hmm. And that was back 10 years ago, 2007, and we sold that to AT&T for about $50 million. 50 billion, I'm sorry, 48.5 about 2015. So therefore that, we're done. I'm just a shareholder of AT&T. It's just generating cash flow. So that was an asset. It was $25 a share. We sold it to 95, so it was on sale, and then we actually sold it. And I was one of the people who helped to build it, as well as real estate. When it was on sale and the market, took its nosedive in 2011, 10 or 11. And then I bought mostly everything that I could buy that was on sale up until 2013. There was nothing really more for me to buy in value-added real estate after 2013. And then I just partnered with Kenny, because Kenny is the only guy that knows how to do value-added real estate. So after I recycled my money 2 or 3 times in 2 or 3 years, then I let him recycle my money. And so now I am only doing very, very unique deals, such as assisted living facilities with another one of my partners that does deals like value add in another asset class. If they're not that way, because I only do value added real estate, I will switch to another asset class. So for example, when oil was $100 a barrel, then it went down to 30. Back in 2016, then I was in that asset class because it was on sale.
Yeah.
So I'm an equal opportunity lover of all asset classes, as long as they're on sale.
Yeah. And there's always something on sale.
Yeah, exactly. There's always something on sale. So I began getting into natural resources and junior mining about 2 years ago because it's on sale.
Yes.
So I've always gone to the asset class that's on sale because I like to do that. It's just value added stuff for me. They're all everything is value added. I don't know anything else.
Yeah.
Right.
I agree. Yeah, we're very much in agreement here, and obviously, we met at the junior mining conference, so we're of a similar mindset on this. Yeah. So this is good stuff. Now, tell me, you started a new show, and you were kind enough to have me as one of your guests while we were out in San Francisco, and it's called Accredited to Accredited. Tell us about the show. What is it? Why are you doing it?
Yeah, no, I'm super excited about this show. And it is something that I had in my mind because I realized that a few things, right, is that, what's on television today is not really, maybe fake news or whatever, but there's not really a lot of content for people that are accredited, number one. I didn't know what an accredited investor was. I kind of just stumbled across it, as I was investing, and I'm like, wow, well, why isn't this like this? Or why don't I know about this, right? And so that was very that was just an eye-opening experience. And then the other part is that I get a lot of questions about what I do. And so I said, let me answer the questions. And then fourth, I was, because I invest in so many different asset classes, many people want to know the other one, right? So it's answering a lot of these questions. And really deep inside, Buck, to be quite honest with you, I actually, because I was responsible for building one of, as a team of building the biggest TV distribution company in the world, which is DirecTV. Even though we didn't own most of the content, we did air it. So I take a little bit of responsibility for dumbing down people, right, with what's on air.
So this is like some sort of mitzvah?
Exactly. I am dead serious.
Okay.
I am repenting. And, so all of these reasons, when I kind of retired, which was a few years ago, I'm young, number one, and I like, what am I going to go do next? And am I going to go do anything? And I said, I want to go do something more. And the other thing is Buck, to be quite honest with you, if you understand the cash flow game, there aren't many things for people in the fast track, right?
Mm-hmm.
I said, there weren't many things for the people in the fast track. I didn't have a lot of people in the fast track. So here in Los Angeles, and I'm all over the world going to these conferences. I do speak all of, Freedom Fest and a number of different economic conferences. And I said, well, why don't I just create something that's kind of already in alignment with what I'm already doing, right? And then also too, I see a lot of these kind of shows and teachers and things of that nature that don't really do anything. They're just teachers.
Yeah.
And so I'm like, oh my God. And because of that, I also take responsibility because I was a victim of a Ponzi scheme about, 10 years ago. I said, wow, I do deals, and I think most people know all of this stuff, but I see that there's so many people that are telling people about stuff, but it's no different than a professor that's never done anything, right?
Yeah. Or one of the things that I always kind of crack up about, and I don't take any shots at anyone in particular, but it's like people telling other people how to, get wealthy and rich when they're when they're not doing that great themselves. I mean, it's like, who do you want to take advice from? I mean, it's, I don't want to be a jerk, but the reality is that's one of the things that's sort of kind of what you're saying, right? I mean, how can you teach somebody about wealth when you're not really, I mean, I've done pretty well. You've done pretty well. I feel fairly, comfortable that I know something and I can teach somebody. And, you're right. That's one of the reasons why I started Wealth Formula Podcast is exactly for that reason, is that there is a real need for people who have got a track record and who've actually done it and who are living the life that they're talking about to actually teach what they've done. So good for you. So the
other part of that too is that because I have so many different partners and advisors and all of these resources, right, that are deals or that really do things in every asset class. They're on my show. So I don't care if it's mining or natural resources or real estate or private equity or television, be that direct TV, right? For me, it doesn't really matter, the Internet of Things, because I know all of these people. So and many people don't even know that this is how it works. So that's why I say it's accredited to accredited.
Right.
It's not just me. I bring on people like yourself, right, that are really doing deals. You're not just teacher. You don't just have a podcast and I know the podcast is a big part of you, but you actually do something.
Right. So
that's really important to me, that everybody on my show is definitely does what it is that they do. I mean, what they're
teaching, right? I mean, you actually do what you're teaching, which is helpful when you actually know what you're talking about, right? Yeah. But you would think that would be a basic requirement. It just doesn't seem to work out that way. But
no, exactly. And I just said, I'm not used to being in front of the TV or front of the pop. I'm used to make money, so it's a little different for me to do it. It's been fun so far, but I said, I've got to really get out and make sure that people don't get, hurt. Right.
Is this show pretty new?
Yeah, it is. It's only, I would say about a month old, maybe. Yeah. Okay. Less than a month.
Yeah. And how do people find it?
They could go to A2A Investor, which is the number 2, A2A investor.com, or you can go to accredited.com.
Got it. So it's a video format.
It's both. It's video. It's remember, I'm a video person, right?
Yeah, right. I'm the one who hides behind the podcasting mic myself, because I like to be able to edit myself. Or I like my assistant to be able to edit me as I'm fumbling around.
Yeah, video is hard.
It is.
I mean, it is. It's hard. And I kind of put it off for some time because it is so hard. And I just said, I cannot not do video because I'm a direct TV, right?
Yeah, right.
I created this thing called direct TV. So,
right.
It's hard for me. It's like, for me, it was it didn't, not having video was diametrically opposed to my belief system. Right. It's like going into a Hindu. I don't know how to be a Hindu or Muslim. I'm a Christian.
Right. So. Right. It is what it is. Right. I mean, and, I think I've actually tried to, do a little bit of video, and I even thought about starting to do this interview on Skype video, but I just have not been able to get myself to do it. I feel like I'd have to clean up. I'd have to shave,
Don't. Don't. I mean, really, Buck, it is not worth it. I'm sorry.
Just don't do it. You do not want people seeing you, Buck.
No, not because of that, but you have such great stuff. It slows you down. Right. Because
Absolutely.
of all those things you're talking about, right? It limits your ability to quickly get interviews, and then it's just much more involved.
Right. Well, it's I'm eager to check it out, and hopefully, I think a number of people who listen to this show are, who they're, a lot of accredited investors. That's basically who listens to this show. I mean, people who are either accredited or going to be accredited pretty soon. So definitely check out Gena's show. It's Accredited to Accredited, and Gena, thank you so much for being on Wealth Formula Podcast today.
Well, thank you, Buck, and I wish you great success, and whatever I could do to help, let me know.
We'll be right back. What do the Rothschilds, the Romneys, and the billionaire hedge fund managers know that you don't about growing and protecting wealth? As you might imagine, the wealthy have a few tricks up their sleeves. One strategy allows you to grow wealth tax-free at a compounding rate with no volatility. It protects your money from creditors and lawsuits, and it lets you invest the same money in two different places at the same time. How about that for amplifying wealth? To learn more, go to wealthformulabanking.com. Again, that's wealthformulabanking.com.
Welcome back, everyone, and I just hope you enjoyed that show with Gena Lofton. Gena's a real interesting person, and definitely check out that Accredited to Accredited show. I think it's an interesting format, and it may resonate with some of you. So, if you're an accredited investor, obviously that's really who that is for. And as you know, this show, for the most part, is sort of geared at high-paid professionals. You might be accredited, you may not be, or you may be close, but there's certainly some parallels there, and Gena knows some things that I don't, and vice versa. So definitely check that out. And also want to remind you again that there is this webinar on Tuesday, the 19th at 5 p.m. Central Time, American Homeowner Preservation. This is perfect for the Christmas time, right? Because what do? They American Homeowner Preservation puts, they keep people in their homes, keeps them from getting foreclosed on, and then you get 12% return in exchange. So it's a great opportunity, great cause, and if you can think of, a way to give back while still getting a return, this is it. I'm in for a six-figure investment on this fund that's coming up that he is going to talk about on Tuesday. So again, check that out. Go to wealthformula.com and sign up for the American Homeowner Preservation webinar. Okay, with that said, I will talk to you next week, hopefully with better sound quality from Montecito instead of Santa Cruz, California. And that's it for me today. It's Buck Joffrey, Wealth Formula Podcast, signing off.
Thank you for listening to the Wealth Formula Podcast. Visit us on the web at wealthformula.com. The information contained in this podcast are opinions, not fact. As always, consult your own financial team before making any investment. See you next time.